The following is an update and technical analysis on Taylor Morrison Home, a company of the consumer cyclical sector in residential construction based upon the daily interval where I mentioned on the 17th of August 2023, we're trading spot price $45.22 when I issued a breakdown sell signal in multiple home builder construction stocks due to compounding fundamental factors linked to the bond markets, significant increases in interest rates, a deteriorating 10-year bond, which then seeped into the 30-year fixed rate surpassing 7%, ultimately knocking on the door of 8%. And here we are currently observing a substantial spread between bids and asks, where only time will tell if those spreads continue to grow larger. And that is when I alerted on a breakdown sell signal undercutting the 50-day and 50 exponential moving average, correlated with a breakdown of this primary reactionary uptrend line off the September 2022 reactionary lows, call it a multi 2-year reactionary low price transitioning point. And we broke down, took out dual price support level, issued that sell signal with additional targets at that 45.53 price support, 42.22, and then ultimately 37.49, with the 200-day moving average hovering in up above. And here's the update, where we ended up breaking down, having that really nice steep counter trend rally really to the button right into the 50 exponential moving average, was rejected pretty impulsively, had a even sharper snapback counter trend rally right into the 50-day moving average for the ultimate dollar cost average, nice clean resistance correlated with that primary downtrend line, and the entire trade thus far down to the bottom of that low, a 16.7% crash, where momentarily we undercut the 200 exponential and 200-day moving average, ended up consolidating briefly right above it, ended up recovering right amongst that key inflection point, and we ended up backtesting really to the button there, especially for an active and or day trader, right off the 42.22 price support there, was bid heavily on the followation off a continuation spike rally for 2.5% in gains. And here we are, just a volatile day, coming right back up and closing right back above that 42.22 price support. And I believe we could gear in for the next couple days and or weeks, honing in on a primary reactionary downtrend line of resistance correlated with the 50 exponential and 50-day moving average, call it a dual line transitioning point, offering you really the most valuable short trade add-on, if not an existing add-on to your position, if and when we rally back to the primary downtrend line. First target being 42.22 price support for a 5.2% crash, down to my new support level, price support level 40.37 for a 9.6% crash there. And that would be the ultimate line in the sand. I believe we take that level out, psychologically, more damage will occur, especially in the technical momentum indicator space. And it would be nothing but a drastic move, in my opinion, which could correlate with potential neckline off a classic head and shoulder looking top here, where the 200-day moving average and 40.37 price support would be the glass wall that shatters, taking out key moving averages, technical price support, and then ultimately, more than likely, what will occur is a death cross, a beginning foundation and or first initial stages of a bearish death cross continuation pattern with the 50 exponential 50-day moving average undercutting the 200s.